you're kind of assessing value, do you just look at the fundamentals, or do you also utilize some technical analysis? Do you look at some charts and patterns as well?
Yeah, so I personally don't look at any charts or technical analysis. However, I use the resources that are already out there. So there's popular accounts on Twitter, or even on some of the oil forums that post these patterns and charts and moving averages and whatnot. And I don't really use them for trading or doing any sort of short-term activity. I more so just use it as an indicator of, okay, these could be points where you may want to exit some of these names. So I was using this in 2021, 2022, not on every single transaction, not even on most of them, just some of them. There was very clear sort of resistance patterns at certain areas where I was just happy to sell these equities and move on, because once again, the risk reward ended up not being in my favor. So that's probably the extent of where I use TA. The one comment I will make on this is, if you're in any name, oil and gas name, that used to also exist in 2013 or 2014, the point from which it fell in that 2014, 2015 collapse is going to be a major resistance to your stock.
Yeah.
Because a lot of people have been holding on for all those years. We're humans. What's the psychology? Oh, I don't want to sell it below what it was at that point, or what I bought it at in this year. And this is the worst way to invest in any sector, but it's just human psychology. So we saw this happen last year with Vermilion. It was around that $14, I want to say, range where it got stuck. We now see it with Meg Energy, where at $24, it's just stuck there. And that's, if you go back 10 years, that's exactly where those stocks were trading at. So I think that's kind of the most important technical analysis that I found to be accurate. Anything else, I just use it purely for informational sort of side purpose, but don't trade around it. No.
Yeah, I just want to show you this really quick. I actually have it pulled up. So this is the oil price relative inflation adjusted. Let me know if you can see my screen here.
Right. Yeah.
Yeah. So this is oil divided by US CPI, and we're pretty much even. I mean, I'd say this is about the mean, like you said, fairly priced. This is the high here in 08. It's got a ratio of 0.67, and then you kind of hovered around 0.5 or so. But this is where we're at now. And when you really look at this stuff historically, there's all this talk about peak oil. And I'm not saying that there isn't peak oil. I'm not quite sure about it, to be honest. But oil really hasn't moved that much to the upside, to the point where people were saying oil will become so scarce anytime soon. I mean, what's your kind of opinion on that?
Yeah, so I guess I have a couple of points on that. So number one is, the vast majority of the world seems to think that oil companies are registered charities, and I'm here to tell you that they're not. They've been behaving that way for whatever reason, trying to undercut each other and trying to stab each other in the back and provide to the world for free a resource that is by nature non-renewable. Yeah, you can wait 200 million years and you'll get more oil, but it's just by nature a dwindling resource. So they have shot themselves in the foot, such that now people think that they should just provide for the world. And anytime oil goes up, it's like, oh, well, how come they're gouging us? How can this be true? But then at the same time, you'll pay all this money for Gucci bags and your apartment rent and your mortgage and your vehicle. Like it doesn't even really matter.
Like Happy Meals and McDonald's, you're paying $10 for nowadays too.
Yeah,
you're
like
about
that's
the
all
oil price being $4 a gallon.
Yeah, that's all just accepted. It's like, oh, whatever. Yeah, that's fine. But the price of oil can go up. There's no way. There must be something wrong here. There must be supply manipulation, or there must be price gouging going on. And you know what? Like, let's just be real as to what's happening. So when people say, okay, there's supply manipulation, there's a cartel here running things, therefore they're charging us more than they should, just keep in mind what's going on from a more zoomed out level. So if you want something to be in good supply down the road. If you want 2, 3, 5 years down the road, you want good supply in it, you need to make sure you invest in it today. You can't just produce oil all of a sudden one day. So what do you need in order to make sure that that investment happens today? Well, you need a price high enough that people will invest today for the future. So that's where some of the control on the market comes in, because if you don't have that control, you'll see this even wilder gyrations in oil price, because you completely undersupply the market and then you have completely oversupplied the market, which is just not good for the commodity that runs the world. As you said, everything is a second order to oil. You can't have it go from $200 to 20 and then 200 to 20. So a lot of people blame OPEC for kind of controlling the market and jacking up the price, when in reality, I think they've just brought the price volatility down, because by them bringing the price up, they create more investment, which in the future leads to lower prices. So there's kind of an ebb and flow. A lot of times they get blamed only for bringing the price up. They don't get the credit for the fact that that higher price is what resulted in the investment that then added to supply into the future. So it goes both ways, and it's important to think of it like that. But kind of a side point there. To the main point, I just think like the oil is cheap, and trying to compare it to inflation. Yes, it's a true way to look at it. There is a bit of sort of speculation in the market. So if people really start to believe in energy scarcity, your ratio could go up a lot higher. If there's some financial stress in the market both ways, you could see the ratio go a lot higher and lower. So there is some other components to it, but on the overall, I do think a lot of us would be very happy if we got to that 0.445 ratio, which should mean oil prices 140-ish. I think we'll be all very happy there, no problem at all. But we really needed to exhaust some of the headwinds, and that's exactly what happened in 2022. The SPR got released, the drilled but uncompleted wells got completed. We had some of the Iranian floating storage end up on the market. We saw all the easy oil in the world, the supply come back online because prices rose so much in 2022. So now we're heading to a point where when that call it energy scarcity mindset does hit, well, now you don't have any bullets in the chamber to fire. It's you and the market and what people are willing to give you for that future barrel. So I think the oil market has just been so fascinating over the last couple of years. The price action is one thing, but the underlying fundamentals and the structural changes and the change in the I keep using this terminology, but the change in the excess amount of bullets you had for your spare kind of insurance, they got fired last year. So that is on the whole market that kind of got obfuscated that hey, to bring the price of oil down in 2022, they released 250 million barrels out of their reserves. So they essentially added 600 to 700,000 of spare capacity onto the market, which is gone. It wasn't excess supply, it was excess inventory. So I think that's kind of where I'll leave that answer. There's definitely a lot of polarizing answers, though. You will get to that sort of question as to what do you think about the ratio of inflation to oil, just given that there's so much headwind to oil, whereas other commodities and other products don't have that.
Yeah. So you brought up the fact that that oil is volatile. It's kind of like a given that we all kind of use. Like oil is volatile. It's kind of axiomatic at this point. But why is oil so volatile? Well, why is it that it can move so much so fast?
Well, so the one thing is obviously the paper markets that affects every single thing in the world. When you have people on the contracts buying, selling, going to record low open interest, it's always going to have an impact on the market. The one thing with oil is it's a relatively big physical market. So there's more oil used on a dollar value basis in a year than all the metals in the world combined times 10. So there's dollar wise, there's way more oil being consumed on the physical market but the paper markets still seem to have a lot of control over what's going on. And then there's a lot of speculation and just raw people making bets on the price of oil into the future that can create that short-term volatility. People are unwilling to hold oil companies and oil contracts for long periods of time because of that inherent volatility. So it creates more volatility because they're buying short-term hedging options, they're buying short-term strategies. And then the other thing is, it's been a very opaque market. So if I asked you today, what is the world oil demand? You'll get 7 different answers, which are ranging between 102 and 104. Some will even tell you 101. If you ask somebody, what is oil supply today? You'll again get an answer that's almost completely unknown. And then the oil market itself, it can go from $20 a barrel to $120 a barrel, just depending on a 1 million barrel per day undersupply versus a 1 million barrel per day oversupply. So you're talking about a 100 million barrel per day market, and a 2% change creates this excessive kind of fluctuation in the market, in a market where we don't have the right data. So I think that's essentially what we're doing is people are betting on half information and then trying to make a conclusion as to what it leads to into the future. And I don't think we'll ever have real-time, timely data. Like, yes, we got software now that can use satellite tracking, that can track these ships, that can track the inventories. They can go and get real-time information in some sense. But on a global scale, you will never have an accurate number on how many barrels are in the market in inventory, and you will never have an accurate number on oil supply or oil demand until months down the road. The IEA, I believe, just made a revision from 2000 onwards, where they added something like 800,000 barrels per day to global demand because things were getting consumed that they weren't able to track in certain parts of the world. So, that's kind of my opinion on why it's so volatile. There's relatively less market participants as well, and then we just use so much of it. So yeah, not a very strongly held view on why oil is very volatile.
Yeah. And you also mentioned the phase shift that you anticipate coming from to energy abundance, from energy abundance to energy scarcity. You're already starting to kind of see that with Rishi Sunak, for example, over at the UK. They recently opened up drilling into the North Sea, right? So how many more, do you also anticipate more of these G7 countries, including the United States and Canada, beginning to cozy up again to drilling? And what will be the impact of the oil price by then, at that point?
Yes. Yeah. I think you're seeing some of the narrative shift already. We saw some indications last year, and then now it seems to be building up steam, where not only is it kind of pro fossil fuel, and again, it's not the majority. It's just some things are coming out one at a time, where it's pro fossil fuels, but there's also a lot of anti-renewable pieces that are suddenly coming out, talking about the cost of wind farms and the cost of solar panels. And then you really think about it and you say, okay, if we don't invest in oil and the price of oil goes up, well, then the price of mining these battery minerals goes up, and manufacturing and processing, therefore the price of your renewables is going up. So you haven't really solved the problem where they said it was just going to get cheaper and cheaper. So I think that's part of the issue with this, is the media narrative has been so one-sided. So that changing is one side of it. Some of these drilling projects getting approved is another side. But I mean, how many people know that Rishi Sunak approved drilling projects in the North Sea or outside of the UK, right? It's not a very well-known fact. So I think that being disseminated more will change some of the narrative. But really, to me, it comes down to two things. The world has to believe that at a higher oil price, US shale cannot grow. That's the one thing they have to believe. The second thing they have to believe is that OPEC Plus is in control. They are back in control after 10 years. So OPEC Plus was in control. Well, OPEC was in control in 2010 to 2014. The world needs to believe that they have a good handle on the markets going forward. So those are the two factors. If we can solve those, I think you'll see a lot of changing discussions around where oil is and whether it's a good investment. Because right now, I'll tell you, 90+% of the investing community, if you told them to invest in oil, they'd say, why? As soon as oil goes up, US shale will just add 1 million barrels per day. And right now, we don't have the data to say no, because the price of oil hasn't gone up and stayed there for a year. So once it goes up 80, 90, 100 plus, stays there for a year, and then you see, well, hang on a sec, the rigs still haven't gone up, or the frac fleet still hasn't gone up, or the fact that the new wells are drilling are just making up for the decline rate on shale. Now some of the people start to question it, because the logic and the data defies what their base level thinking is. So you really need that shift. And that's the problem with the oil industry, is the lower for longer cycle went on for so long that people are now jaded. If it was only at 2 years at $50 a barrel, people might be more willing to come back in and say, okay, things have changed. But they've heard the same story for 6 years, that shale is collapsing, shale is collapsing, shale is collapsing.
Yeah.
And yet it didn't collapse. It kept growing 1 million barrels per day. So now they say, I don't believe any of this nonsense or this data. Like, show me when it actually happens or is well on its way, and then I'll put my money back into this sector. And you know what? I'm happy for that. That's fine. Because in the meantime, what's happened is the kind of the third structural shift that's happened is companies have stopped investing in growth. So they've started investing back into dividends, debt payback, and buybacks. And hey, if a company over the next 6 months can buy back 12%, 10% of their float at 3 times cash flow, at 2.5 times cash flow, be my guest. Let's ourselves push this share price up, just with less shares outstanding. And then whoever wants to enter at a future point in time now has a massively reduced float. And then this is not just me saying what I think is going to happen. There's already companies out there that have reduced their float 20, 30% since 2020. So they're already well on their way. And there's actually one service company I want to say that's reduced their float almost 40% since 2017. So they're already putting their money where their mouth is.
Yeah. So this is kind of a tough question. I'm not expecting you to like have a clear-cut answer to it, but have we hit peak oil?
Like peak oil as in supply, or?
Yeah, as a supply.
I don't believe so. No, because the peak oil supply can only happen if there's peak oil demand. And if the demand is there, we will produce the oil at just a higher price. So if you told me, if you came up to me today and said, hey, Shubham, I can promise you $150 oil for the next 5 years. And you're like, okay. And I'm also going to give you an unlimited check, a blank check to go and find me oil. Well, I can get you 5 million barrels per day of more supply in 5 years from the Canadian oil sands, from fields in Kurdistan, from going out and fixing some of the Venezuelan fields. If you gave me $150 a barrel for the next 5 years, I could do it. So we have the supply. We just don't have the $70 oil supply. We don't have the $80 oil supply. We have $90, $100+ oil supply, especially because the risk premium that people are requiring is a lot more. It's not because that barrel physically costs $90 to produce. It's because people are saying, no, I put money in 2014 and I haven't got my dollar back even now, 10 years later. So why should I give you another dollar? That's the way they're thinking. They're saying, okay, well, if you want my next dollar, show me that you're making 30% free cash flow yield. Well, that can only happen at $95, $100 oil. So that's essentially what's causing us not to invest in that supply anymore. But we have the oil. We have the oil. I mean, I don't want to make any sort of crazy kind of hot take here, but I think we can add, if we really needed to, we can add 10 million barrels per day by 2030. If we really needed to, we can do it. Yeah. But it's going to cost you. It's not going to happen at $70 oil, especially with shale declining. It's definitely not going to happen, because when I say we need to add 10 million barrels by 2030, that essentially means we need to add 12 to 14 million barrels, because US shale is going to decline 2 to 4 million barrels. By then, maybe more. We're now getting into hypotheticals 7 years out. So just directionally, what the addition would need to be in order to grow the total by that amount.
But don't we need a different type of crude oil here in the United States that our refiners use versus what we actually produce? I believe it's like Venezuelan oil, something like that. I know there's light, sweet, and heavy sour. Which one
Yes,
do
sir.
we use?
Yeah, so the U.S. refining for the most part right now is structured towards the heavy sour barrels
Okay.
or the medium sour barrels. The U.S. produces it's not even an oil anymore. It's light oil, but it's getting into your natural gas liquids and your condensate grade of oil, and a lot of that is now exported out of the U.S. So year to date, 2023, America has exported roughly 4.1 million barrels per day of crude. The majority of that is your light sweet grade that goes into Europe, into Asia, and other parts of the world. And then they import roughly 3.5 million barrels per day from Canada every single day that then gets processed in the refineries. So you're absolutely correct, is that from a refining standpoint, the US needs more Mexican, Venezuelan, Iraqi, and Canadian oil if they really want to maintain the same kind of refining infrastructure. However, in a long enough time period, you can change your refining sort of mix or blend as well. Would the US want to go and invest in that? Maybe not, because they have Canada right there that they're hoping is going to be, maybe not today, but in 2, 3, 5 years is going to be your next source of sort of supply. So yeah, we'll I guess find out. One of the things that keeps me a very, very oil bull is that nobody in Canada wants to add more supply. So if you've knocked down the one place in the world where you can add meaningful 7-figure barrels, well, then you're going to have your structural bull thesis continue on for a lot longer. And yeah, we can thank some of the political decisions in North America for that.
Yeah. So why did the U.S. structure its refining capacity in such a way that it only feeds in heavy sour as opposed to light sweet, which it actually produces from within its own soil?
Right. So really the main reason is that when the U.S. refineries were built, the U.S. was producing heavy sour, medium
Okay.
sour out of California. They were producing 2 million barrels per day out of Alaska. They were importing a lot of oil from Canada, from Mexico, from Venezuela. And so a lot of the oil that was being processed was that quality. The light sweet revolution has only really taken off since about 2012, I'd say. 2010 to 2012 is when things really started picking up. And then 2016 onwards is when the huge barrels got added. And the US has not built a new refinery in decades. I want to say the Exxon Blade project was the newest one after like 20 or 30, maybe more years. And I think there's one more refining project on the go right now, but a lot of our refining infrastructure in the US is 25, 30, 40 years old, maybe some even 50 years old. So they were built for a different time, and now we're at a different time, with the oil that's being produced. So the real question is, what does the US want to do? Do they want to keep their barrels inland, or do they want to continue sending their light sweet barrels out and then importing some of the heavier barrels? Because let me just put it this way, just to put a data point out there, is it'll cost you tens of billions of dollars to build a refinery for 500,000 barrels per day capacity, whereas you can send oil from the Gulf Coast of Texas all the way to China for $2 a barrel, something like that. Like shipping is not that expensive.
Yeah.
Shipping oil and importing oil is just not that expensive compared to what it costs to build and then run expensive refining equipment. So which company wants to be the first one who goes out and does that? I guess we'll find out. If they see an arbitrage there, they'll do it. But if there's no arbitrage, then you're playing a betting game, and there's not enough money right now funding oil and gas to go and make bets on future arbitrage opportunities.
Interesting. So who typically buys light sweet oil from us?
So a lot of the U.S. exports are going into Europe, and then China is buying a lot of the barrels as well, and then India buys a few. Some of the other Asian countries, I want to say Vietnam was buying a few. It's kind of all over the place, but there's really no big buyer. It's a lot of it ends up in Europe through the Netherlands, and then a lot of it ends up in the China, Asia complex, and their refineries are newer refineries, so they're built for that sort of grade of oil. Overall, globally, we are producing less heavy sour than we used to be, and we're producing a lot more light sweet. So it gets into a kind of blending. What's the right mix of crude oil we need in the world going forward? There's certain grades can only produce this kind of product. So you can't get asphalt out of a light sweet grade. You're not going to get your petroleum waxes out of a light sweet grade, and your heavier grade is going to produce a bigger content of diesel compared to the lighter grade. So there's sort of all sorts of things that need to be taken into account when you build a refinery around that. And then it's not just the grade of oil, it's how much sulfur is in there, how much contaminants is in there, what is the max water percentage that can be in that oil mixture, what kind of fuels are you trying to produce? If you're building a refinery in a place that's a high manufacturing area, well, you want more diesel fuel produced. If you're in an area that's very, very population centric, you want more gasoline. So there's a lot of components and sort of factors that go into that. All I can tell you is the world is doing a much better job at building new refineries than the US is at this point. And maybe the US doesn't need new refineries, so they're just taking along with what they have, whereas the world does need the new refining infrastructure, so they're willing to put the money behind it.
Got it. So it sounds like, from what I'm hearing, light sweet is more geared towards light sweet is geared more towards fabrics, and then heavy sour is geared more towards actual not gasoline, but
diesel. I think more diesel distillates.
More diesel. Yeah. Okay.
Yeah. So that's kind of the rough breakdown, but it's not as clear as that, because light sweet oil can also produce diesel. Mm-hmm. So it just produces less of a percentage per barrel of diesel than a heavy barrel would. So each barrel is going to produce diesel, jet fuel, kerosene, naphtha, some sort of waxes and asphalt, and then there might be some other things that drop out of it, depending on the carbon chain and the molecule. Whereas the light sweet will produce, we're going to produce a higher percentage of gasoline. We're going to produce a higher percentage of naphtha per that barrel. And one interesting thing that your viewers may find interesting is that when you refine 1 barrel of oil, you end up producing about 1.06 barrels of product, because you're usually refining a barrel that's heavier, as in more energy dense, into products that are less energy dense, so you get more volume.
I see.
Out of that. So when you look at global refining capacity, if we want to process 100 million barrels per day of oil, we're only running about 95 million barrels per day of refining capacity for that.
Interesting. Well, this has been a very enlightening episode. I really enjoyed this talk here, Shubham. Thank you so much for coming on. Go ahead and tell the audience where they can find you again.
Yeah, you bet. So my website, whitetundra.ca, you can see all my content on there, the previous videos, archives. I'm a bit behind on updating the archives, but we'll get to that. My 2 portfolios are fully public. I'd like to update them every couple of months, or if there's major changes. So that's on there. All my articles and whatnot, everything is on there. And then the future Zoom sessions as well. Everything is pro bono. If you get an email from me that you got to pay me, it's fake. I don't charge for anything. And then my Twitter handle is at whitetundra.sg. You can find me there. I like to post about supply, demand, macro, engineering, weld results, etc. As well. And then I don't exactly know what my YouTube handle is, but if you just search White Tundra Investments, you will find it on there. So I think it should be on the top. I want to say I was competing with the white Toyota Tundra on the Google search results for a while.
Yeah,
and I think I finally have. I think I finally won that battle in certain areas. Maybe other areas I still have some work to do. So that's kind of where I am. And then I have a contact us page on the website as well, where any questions, any comments, any future topics you would like to see from my presentations, feel free to shoot me a message, and we can chat from there.
Yeah, lots of stuff to sink your teeth into, guys. So if you enjoyed this content, go ahead and hit the like button, hit the subscribe button, comment down below, share it with friends. This has been a very enlightening talk. I highly recommend that you take this video and show it to, some of your more ignorant, let's say, peers in your group. And with that said, you guys, I will see you in the next episode. Bye, y'all.